In theory, Bitcoin mining sounds like one of the best passive income opportunities, because all you have to do is buy one of these machines and they'll essentially print you Bitcoin for years to come. But in reality, we know it's not quite as easy as that. These machines are big, they're loud, they're expensive, and they pretty often require quite a bit of infrastructure to run. But that's why I was so excited to find out that there are actually mining hosting companies out there that will take care of all of the complicated stuff for managing your mining hardware while you just get to sit back and collect those Bitcoin mining rewards. The first one I came across is Musk Miners, which is a smaller one. There's also Frontier Mining at bitcoinmined.net. And the one we're really going to be taking a look at in this video is Compass Mining at compassmining.io. So for example, you can see on here, we can go to start mining and we can select a Bitcoin miner from their website, buy them right here, and then they will set them up in their own warehouses, install them, get them online for us, and we just sit back and collect the Bitcoin rewards. And what really got me excited about this opportunity right now is that, like Bitcoin, the price of these miners fluctuate with the market. So these machines usually go for upwards of $12,000, but they're priced below $6,000 each right now. Of course, the question we have to answer is this actually worth it? So in this video, I'll be running through all of the numbers of Bitcoin mining. For this example, we will be using the Compass mining solution to figure out if Bitcoin mining is actually worth it today at these prices or at future prices. I was actually surprised to find out that it's not as profitable as I had hoped, but there is one case where it might be way more profitable for you. So stay tuned and we will dive into all of it. So first, I want to disclose that I'm approaching this from a Bitcoin long-term holder perspective. I'm not as concerned about the dollar profitability of Bitcoin mining as much as I am how much Bitcoin can I get for my money. So at the end of the day, we're going to be comparing the opportunity of Bitcoin mining through something like Compass mining to the alternative, which would just be dollar cost averaging that same amount of money into Bitcoin over the next couple months. And by doing so, we can figure out if I can get more Bitcoin for the same amount of money by mining or by dollar cost averaging. But to start, we have to take a look at the cost of these Bitcoin miners. Now, I actually did some analysis and ran numbers on both of the miners you see here, the What's miner and the Ant miner. And they are pretty similar, but I'm going to focus the bulk of this analysis on the What's miner because it has a slightly higher hash rate, which means it will create more Bitcoin. And with such a small price difference here, I'd rather pay slightly more for more hash rate and thereby more Bitcoin. So if we take a look here at the What's miner, you'll see it's priced at $5,900, which again is about the lowest these machines have been priced in quite some time. And this page will show all of the costs you need to worry about if you're going to get into Bitcoin mining, particularly with Compass mining. So first of all, we have an estimated online date of August 31st. So this is important to keep in mind. It is mid-June right now. So if you bought this today, it will take about 2 months for them to get the miner installed and online and running and actually mining Bitcoin for you. So that's important to consider because there will be a 2-month period where you're not generating any Bitcoin at all after you get started. The next thing we're going to take a look at down here is hosting with Compass. This is the whole point of choosing a service like this, is because we just order it and ship it to them and they take care of all of the headache of setting it up and getting online. And they do that for $0. But this does come with a hosting fee, and that term length is going to be 3 years. And we can see this monthly hosting agreement is going to be $186.60. And this is essentially just going to cover the electricity of your miner, which is a cost you would incur yourself if you decided to host it at home. So you really just get the convenience of someone else hosting it and worrying about all of the maintenance and upkeep, and you just pay them the monthly electric costs every month. So this comes with an upfront payment of about $6,700, and then of course you would have $186 due every month for the 3-year hosting period, and we will get into those costs more specifically here in a little bit. But overall, this gives us the first variable of Bitcoin mining versus dollar cost averaging. We now know the upfront costs and some of the other numbers we need to keep in mind moving forward. Now, the next thing we need to figure out is exactly how much these machines will mine us in Bitcoin over their lifespan. Now, this is a tricky metric to pin down accurately, but luckily there is a very specific formula we can follow to predict our daily Bitcoin earnings and kind of map out those earnings over time. So right here is the formula we'll be using to calculate our daily Bitcoin earnings if we were to purchase the What's miner listed here on Compass Mining. So it starts right here using the miner hash rate, and we know the What's miner has 110 terahashes per second of hash rate. So we would plug that in and then divide it by the network hash rate, and this is the total hash rate of all of the miners connected to the network. And again, this is all public on the blockchain, so we can see exactly what the hash rate has been over time, and therefore calculate our percent ownership of the total network hash rate if we were to buy just one of these miners. Now, obviously with the market crashing recently, it has been a little more volatile than usual. And this chart shows that it actually has dropped quite low just over the last 24 hours. So we're going to run a couple different estimates with hash rates here in a minute. But just know all of this information is available and visible on a couple different websites. So if you want to plug in different numbers and test things based on where you predict the hash rate could go in the future, then you can do that. But those are really the two biggest variables. The next one is the number of blocks per day, which is pretty average, 144 blocks, and that's based on a 10-minute block time. And then, of course, the block reward. Every block pays out 6.25 Bitcoin until the halving approximately in 2024, when it will drop to 3.125 Bitcoin. And then typically if you're mining in a pool, there will be a small fee, about 2.5%. So we will, of course, include that later. But this is the formula right here you need to do to calculate daily Bitcoin earnings for a given miner. And this is exactly what I've put together right here in this spreadsheet. I've put all of these metrics needed to calculate the daily earnings for one of these miners. Actually, both of the miners. As you can see, I have both the WhatsMiner and the Antminer listed here up top. And here I have listed all of my assumptions that I'm putting together into these formulas to calculate my expected earnings. So I'm going to walk through these real quick. First is the current network hash rate. As we saw, it has dipped a little bit lately, but it has grown quite aggressively over time, especially in the last year. So this is one of the biggest variables right here, is trying to figure out the starting hash rate for you to be mining, because it does fluctuate even day to day, but as we can see, it is generally up over time. So this red line here is the average hash rate over a 30-day period, and it's a little more smooth than trying to pick a number off of these spikes of hash rate. So if we look, this mean peaked at around 220, and today sits around 215. So I'm actually going to update this hash rate here to 215, and I've switched this to terahashes per second just so it's easily divisible with the miner hash rates. So there are a couple zeros, I think, missing here. But if you were to be running this yourself, you could just pull the current network hash rate to get a good starting point, and I'll explain why we need a starting point here in a minute. But the next variable here is going to be the pool fee. As we said, it's going to be about 2.5%. That's just the cost you pay for mining in a pool with other miners. And the reason you do that is because when the pool earns Bitcoin, it gets split among everybody. You don't have to be the one miner to solve that algorithm and get the whole block payout. You just share it with everybody and you get a consistent payment for every block that is mined on the network. So you get more consistent payouts, but that does come with a little bit of a fee here, about 2.5% on average. Now this next metric is another very important one for our calculations, and it is another very tricky one to pinpoint. Again, as we saw, the hash rate grows over time. So our earnings today are not going to be the same as the earnings we get tomorrow because it all depends on the daily hash rate. As hash rate goes up, our one miner will have a lower percentage of those network total hash rate, which means we get a lower share of the total network Bitcoin earnings. So in order to predict our Bitcoin mining income into the future, we have to figure out some sort of growth rate that will happen to the hash rate over time and apply that to our daily estimated earnings. And this is one of the trickiest parts because there's no great way to do this. It is generally up, but it has not been a smooth increase. Obviously, you have a big drop here, and this is from the China Bitcoin mining ban. But it's also ramped up really aggressively in the last year, and that could be brought on by things like public mining companies who are investing really aggressively into bringing more miners online. But for this reason, we're going to take a look at a couple different potential growth rates, which again is going to be dependent on how profitable it is for people to be mining Bitcoin at the time and their desire to bring more miners onto the network. So if we zoom out here, we can see it's really ramped up in the last couple of years, which makes me think I don't want to take a growth rate from these really early days when there wasn't as much growth on the network. So initially, I pulled a 3-year growth rate from the peak here, about 220, to 3 years prior. There we go, and that is 48. So to get the annual growth rate here, I'm basically just going to plug, right here, I'm going to plug 220 into this top position and, what would I say, 48 into the beginning position here. All right, so like we said, first we got about 220 on the hash rate divided by 48 on the hash rate. And then we're going to divide that by 1 over t. T in this case is 3 years. So 1 over 3 would be 1/3. Do 0.33, a couple extra for good measure. And then minus 1. So here we have a 66.1% annual growth rate if we did 3 years ago to the peak that it reached. So I'll update this here to 66. I think it was 66.1%. Now, if we take a look at a 1-year growth rate, it's going to be a little bit different. As we can see here, this is on Masari.io. And because the hash rate dipped so recently, back down to almost 180 here, the growth rate is only 39% from 1 year ago, which is a much lower growth rate. That would only be 39% year over year, as opposed to the 66 year over year. But that does give us another number to play with if we want to do that and test some different numbers. Also just pull in an average of the two, which would be about 52%, and we can plug that one in as well and see how it impacts our earnings. So with these annual growth rates, we can predict a daily hash rate growth, which we can then use to figure out our daily estimated earnings over time. Again, with the Bitcoin hash rate growing over time, we would expect the daily hash rate to grow over time, meaning our earnings are going to slightly gradually decrease over time as this network activity grows. And to get this number, I'm simply taking the annual growth rate and dividing it by 365 days in a year to get the daily growth rate. And then I've just turned it into a number I can easily multiply here, so I can plug it into a formula. But I will have to update this one. So we've got that divided by 365 days in a year. Get that in percentage. So that is 0.18%. So this will be our daily hash rate growth if we hold true to that 66% annual growth rate that we've had over the last 3 years annualized. I'm going to go ahead and calculate this for our other figures as well, and then we can compare earnings there. Cool. Okay, and for the rest of these numbers, they're fixed, they're easy. We know the block reward is currently at 6.25 Bitcoin per block. We know we mine on average 144 blocks a day. And we know the hash rate of our two miners right here. And then this last variable is the days until the miner comes online. So if we go over here, we have an estimated online date, as we said, of August 31st, 2022, which means there is, again, about 2 months for the network hash rate to grow before our miners come online. So if they went online today, the earnings are going to be a little bit different than if they were to come online in 2 months. Again, we don't know what's going to happen in the market. Maybe the hash rate continues to drop a little bit. Maybe it goes back up. But that's why we're calculating this daily growth rate, because we know over time it will increase at a approximately consistent rate. So I've plugged this in here so we can figure out the estimated hash rate at the very start of mining if these were to go online on August 31st. And that is going to be based on the current hash rate plus 77 days as of today of this estimated daily hash rate growth. And then to calculate way far in the future our earnings a couple years down the road, I have the estimated Bitcoin halving date at May 1st. And this is because on that day, these Bitcoin rewards will drop from 6.25 again to 3.125 Bitcoin per block, which will slice our earnings in half immediately. So we have to prepare for that and have that in our calculations if we want to calculate our Bitcoin earnings that far out. And that gets us into our daily Bitcoin mining earning calculations. So right here for the very first one, we have August 31st, and this would be the predicted network hash rate on that day if today's hash rate is what we say here at 215. And it increases at this predicted rate of about 0.18% per day until that point. So that gets us the daily hash rate. And then you go over here and we have the formula we looked at earlier, which is the hash rate divided by the network hash rate times the number of blocks per day times the Bitcoin per block. And that will get us the daily Bitcoin mined per day. So we can see 0.0004 Bitcoin and a little bit less for the Antminer, again, because it has lower hash rate. Again, you can already see quite a disparity here between the two, just based on their hash rate differences. The WhatsMiner has about 10% more hash rate, which means it will mine about 10% more Bitcoin. So for, what is it, like $150 difference between the two devices, you get 10% more Bitcoin. So when I look at these, I think, that's a pretty small price to pay for a pretty substantial increase in your daily Bitcoin earnings. So if we apply this predicted hash rate all the way down at the 66% annual growth rate, now we have our total predicted earnings. And I believe this is about 3 years out. I went from August 31st, 2022. Yep, August 31st, 2025. And you can see when you get to the end, these Bitcoin earnings are quite small. So again, I don't know if this network hash rate will start to level out when it reaches a certain point. Maybe people will stop bringing miners online. We also don't know if it's going to increase faster. They're going to bring bigger and better machines onto the network that just can get more and more competitive. So really, I just think the best we can do is plug in a couple different annual hash rate metrics and see which numbers kind of make the most sense. And keep in mind, this is our most aggressive hash rate growth estimate right here, the 66%. But with this, at about 18 months, we're expected to have about 0.14 Bitcoin with the What's miner, about 0.125 the Ant miner. Then after 3 years, again, I've mapped this out for 3 years because that hosting agreement with Compass is 3 years long. So I think that's the safest prediction we can work with here. And that'll get us about 0.17 and 0.15 on the Ant miner. And you see, it's not really a big jump from this 18-month to the 36-month mark, which is kind of crazy. It's really like, these earnings just decrease pretty quick over time, unless you're rapidly growing your hash rate to keep up with the network growth, which is just an ongoing investment if that's what you want to go for. So if we take this over here, we can take a look at this chart I've put together, kind of comparing dollar cost averaging in different environments to the earnings you get from these miners. I'm actually going to fix these numbers real quick. Okay, so these are the upfront costs of the miners after taxes and fees, and that is not including the monthly hosting because I worked that in here below. So basically what I've done is this. If I were to start dollar cost averaging at the end of this month versus buying a miner at the end of this month in full, what would that look like if I was spending the exact same amount of money on both, which would be the total of 6,400 for the What's miner right now, or 6,400 split over the next 6 or 7 months, dollar cost average month over month over month. So as we get started, you can see that you're not getting any Bitcoin, of course, those first couple months because it is going to be until August 31st that those miner comes online, potentially. And Compass Mining actually had some delays in the past. So worst case scenario, that could get pushed back even further, which is just another variable that you can't really control here. And then I have a couple different price points predicting the price of Bitcoin I would be able to buy at, depending on the market. And to be honest, my bear case right here is probably a little bullish because it still goes up over the next couple months and it could very well go down. And my bull case might be a little far-fetched considering we're 2 weeks out from the end of the month and we're sitting at about 20,500 right now. But this is the numbers, this is the value of Bitcoin I would get if I were dollar cost averaging at various prices each of these months. And you can see I do adjust the prices a little bit depending on the whether it's a bear case, bull case, or neutral, so that I estimate a different kind of buy-in point for dollar cost averaging over the next several months. And my goal of doing this is really to figure out, is there a case where the market goes low and taking the risk with buying a miner is better, or the market goes high and I don't have enough time to accumulate Bitcoin at a low price? And in that case, the miner was the better choice because I've invested it up front. It's going to continue mining for years to come. So that's kind of what I wanted to figure out with this chart. So basically with these simulated prices right here, you can see at the end of the year, which is about 7 months of dollar cost averaging versus buying the miner and waiting for 7 months, how much Bitcoin I've got and how much money I've spent. And the answer is Bitcoin dollar cost averaging wins by a long shot in the short term. Even at bull prices, if we were to go up to 60,000 at the end of the year, I've still accumulated 0.15 Bitcoin in the next 7 months for the same price, actually for a lower price, as you'll see in a minute, than I would have mined 0.04 Bitcoin. So I have, 4 or 5 times as much Bitcoin without buying a miner. And these numbers really add up when you factor in the electricity to it. So if we fast forward 18 months, because this is, our approximate halving date, I've still only invested $6,400 for the dollar cost average. My Bitcoin earnings here are going to be fixed, but my miners should keep working for the next couple of years. But even after 18 months, even in my bull case dollar cost average where we end the year at 60,000, I still have more Bitcoin than if I mined for 18 months. And after 18 months with an additional $186 a month for those hosting fees, I've paid a total of $9,748 for this What's miner, and I've got less Bitcoin, which effectively increased my cost basis for this Bitcoin when I could have just dollar cost average again in the short term and come out ahead. These numbers are even worse after 36 months because I pay for another 18 months of electricity and mine even less Bitcoin. And, I do come out ahead against the bull case here, but I've spent twice as much doing it. So is that worth it? Probably not. But of course, this is with the most aggressive, highest growth rate for Bitcoin hash rate growth. So let's go back and work with our lowest one, which is this 39% year over year growth. And as you can see, it does bump our earnings up a little bit, but not a whole lot. We go from about 0.14 to 0.16, which is a small increase, but it's not huge, even for a pretty considerably slower network growth rate. But we go back over here and still we're coming out ahead maybe against the bull case over 18 months, at least with Bitcoin mined, and definitely over the bull case over the long term with Bitcoin mined. But you still look at this cost and you're still spending twice as much to mine this Bitcoin, only to get at best about 30% more here. So short term, I mean, it does look attractive because you look at this cost and you're spending $186 a month and you're mining 0.01 Bitcoin. So that's about, if Bitcoin was $18,000, that would be, about on par. But if Bitcoin starts going lower than that, you're actually losing money by mining it because it's going to cost you more in electricity than it is to just buy it off the market. Include the fact that you've paid thousands of dollars to get these machines up and running in the first place, which is just a cost that is clearly too big to profit out of because you just put too much money into the machines before you actually start getting that cold hard Bitcoin in your wallet. So ultimately, while the idea of mining Bitcoin sounds really cool and exciting, especially when you can outsource it to someone like Compass Mining who can just hold the machine for you and do all the hard work, you just collect the Bitcoin, the numbers don't really add up. Even at these low mining prices, it still makes sense to just dollar cost average into Bitcoin and accumulate Bitcoin because you're going to earn more that way. Of course, this does ignore the fact that, if you wanted to actually generate profit, then maybe mining Bitcoin could be good long term. If you sell it, it will be creating Bitcoin years in the future that you could just market sell as soon as you bought it. But still, if you're just after accumulating Bitcoin like I am, then I think it still just makes the most sense at dollar cost average, at least based on my calculations here. Of course, if I missed anything or you guys think there's something I put in incorrectly, I would love to hear it because I still love the idea of owning a miner, but it just doesn't seem like it makes sense to me at this point. Now, all that being said, I think there still could be one case where buying a miner helps you come out ahead. And that's the scenario where you buy it within an LLC as a business expense, and then you can depreciate that device over its lifespan. Then, theoretically, the $6,400 you spend on the miner could be deducted directly against your income, either that first year or for a couple years at a time. Of course, I'm not a tax pro here, and if this is something you would want to explore, it's probably worth consulting someone who knows exactly how to go through that process. But from my understanding, you would really only save the dollar value that would otherwise be taxed on this amount. So if it was $6,400, if you had that in income, let's say you're in the 24% tax bracket, then you would be taxed $1,536 on that amount. But by buying a miner with it, this $6,400 becomes tax deductible, you deduct from your income, and you end up saving $1,536 off of your taxes. But is that worth it to spend $6,400 on a miner? That might not buy you as much Bitcoin, because otherwise you would have just had $4,864 that you could put into Bitcoin directly after tax. And that could still potentially be a better investment than buying a miner and hoping it pays off over time. And again, there are just so many variables with mining that it does kind of scare me to get into Bitcoin mining. Again, there are so many public companies out there. You have Marathon, Riot, Hut8, Bitfarms, all of these mining companies that are trying to expand aggressively to just dominate that hash rate and earn as much Bitcoin as they can. There's no way I'm going to be able to compete with that as someone who's just wanting to buy a single miner and test it out. And it really all comes back to that Bitcoin network hash rate. As more miners come on the network, mining is going to be tougher and tougher, which means lower earnings for the little guy. Of course, I still do think it'd be cool to own a miner someday, but at these prices, it just doesn't make sense because I'd much rather just own as much Bitcoin as possible. And it still looks like dollar cost averaging is the best way to do that. So that's my conclusion. I'm just going to keep buying Bitcoin, especially the more this bear market drags out. I'm just feeling better and better about the long-term opportunities. For more details on how I'm navigating this bear market, check out my previous video here. Stay safe out there, stay strong, and I'll see you guys next time.